They put the silicon in Silicon Valley. For 50 years, Intel was not just a company, it was the heartbeat of the tech world. If you owned a computer, you owned Intel. But empires fall. While Intel grew complacent, TSMC took their manufacturing crown. AMD stole their market share. And NVIDIA captured the AI future. We have analyzed Intel's financial filings from the peak of 2020 through the brutal restructuring of 2025. The data tells a story of an existential crisis, a company that went from printing money to burning it. How did a company generating nearly $80 billion in revenue crash so hard? And can their new strategy, IDM 2.0, actually save them? This is the financial story of Intel, the $100 billion gamble. Let's go back to 2020. On paper, Intel looked invincible. According to the 2020 10K, Intel reported record revenue of $77.9 billion. In 2021, it grew even further to $79.0 billion. The cash flow was massive, but these numbers were a mirage. Inside the filings, the cracks were visible. Apple announced it was leaving Intel chips for its own silicon. Data center operating margins began to shrink. In 2021, a new CEO, Pat Gelsinger, returned to the company. He looked at the financials and the technology roadmap and realized the truth. Intel was behind. He made a shocking decision. Instead of going fabless like everyone else, Intel would double down. They would build more factories. They launched IDM 2.0. They promised to catch up to Moore's Law in 4 years. Then came the reckoning. 2022 and 2023 were arguably the worst years in Intel's history. The post-pandemic PC boom ended abruptly. Revenue in 2022 plunged to $63.1 billion. By 2023, it fell further to $54.2 billion. Think about that. In just 2 years, $25 billion of yearly revenue evaporated. The costs of building new fabs in Arizona and Ohio were astronomical. Gross margins, which used to be over 60%, collapsed to the mid-30s. The company swung from massive profits to billions in operational losses. The financials forced a painful choice. In 2023, Intel slashed its dividend to pennies. A company known for safety was now a high-risk turnaround play. By 2024 and 2025, Intel had to prove it could survive. They radically changed how they reported their numbers. They split the company's financials into two: Intel Products, making chips, and Intel Foundry, building chips. The 2024 10K revealed the ugly truth. The Foundry business alone had operating losses exceeding $7 billion. But looking at the 2025 quarterly reports, specifically the Q3 10Q, we see signs of the bottom. Revenue stabilized around the $13–14 billion per quarter mark. The client computing group showed resilience with the launch of AI PCs and Lunar Lake chips. However, the bleeding hasn't stopped. The 2025 filings show continued restructuring charges, billions spent on laying off over 15% of their workforce to save cash. They are betting everything on a technology node called 18A. If it works, they regain leadership. If it fails, the Intel we know is finished. From 2020 to 2025, Intel went from the undisputed king to a company fighting for its life. The financials show a company in the middle of open-heart surgery. They are spending billions to build the factories of tomorrow while losing money today. This is not just a stock chart. It is the story of American manufacturing trying to claw its way back from the brink. Will Pat Gelsinger's gamble pay off? The numbers in the next 12 months will decide the fate of Silicon Valley's namesake. Thanks for watching. If you want to track the recovery or the fall of the tech giants, make sure to subscribe.